The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin. Glad you're joining us right here today at TFNN.com. Don't forget, you can always listen to us online at TFNN.com, and you can watch us on Tiger TV right there. See the charts that we're talking about on the screen, and check out the archives as well of the other shows. We've got a lot of live radio happening every single day, 9 hours a day, and you can listen to us anywhere on your mobile phone at TFNN.mobi. Right now, let's go ahead and check out where the market is trading at right now. We have the S&P down 11 points on the day. It is moving. And we got the NASDAQ down 15.5. We got the Russell down 11. We got the Dow down 20, or Dow, not Dow. Dow's down 55. Gold is down 25. So points, over 25 points right now, over 1%, 1.5%, and growing. Looking on over at silver, it is currently down almost 2% on the day. Copper down almost 1.5% on the day. We got oil down $2. So somebody pulled the plug out. $2 down right now on the day, over 2% move. Looking on over at corn. Corn decided to go quiet after its big limit moves, only down $1. Which isn't even, I mean, it's 0.16%. Soybeans, though, has decided to go ahead and make up for the slack there. Moving on down 14 points. That's over 1% right now. Down move on soybeans. A lot of red across the board. You got the euro dollar is up 23. The pound dollar is up 46. The Aussie dollar is up 24. Euro yen's down 49. Pound yen's down 30. US yen's down 49. US Canadian is down 17. And US franc is down 42. So we're getting some interesting dynamics going on right now. We're getting some basically weak dollar and weak market. And that's, and weak, even weak commodities in the middle of all that, looking at everything, just as far as the, the FX pairs there. Now, if we go over and we do look at the DAX right there, let's see, it's not even loading at the moment, but I'll come back. I'll bring that back here a little bit later. But anyway, some interesting dynamics, things changing, something's happening. We did have some news, so let's talk about that news. That's, of course, part of that something that's going on right now. And we got a few different things. Let's see. What do we have? We had last night we had the Aussie dollar report come out. They left their trade, the trade balance. It was better than expected, okay? Instead of being the negative 1 billion trade balance deficit there, they thought it'd be negative 1. It actually came in at negative 0.18 billion, so that's a better, trade balance report. However, at the same time, they revised the previous number, which was wretched. They revised that one, which came in at negative 1.06, and they bumped it down to 1.22 billion. So you had conflicting news, and so that news trade would have been a bit challenging, to say the least, to be able to trade that Aussie dollar news report, because it basically you got good and bad news by them revising the previous number. Rolling on over to this morning, looking at pound dollar. Pound, it came in, worse than expected, but not dramatically worse than expected. And let me pull this up right here. I'll pull the chart up on the screen. It takes a minute, but we'll get it going for you. And right here, we'll pull up the pound. Let's see, right there. And then let me change one more setting for you. Get rid of all this stuff and add in a few more days on here, okay? All right, so we got all those settings built in, and now I go back and we'll pull up the pound dollar right now. We'll look at that movement from last night's report, and I guess we'll go ahead. We got to be able to look at last night, so we can either pull in. We'll just do the 24/7, so that way you're seeing the extended sessions as well. And that'll let us do quite a bit of things. But all right, so I got that up, and let me pull up right here from last night. We had the report come out. It took its time, but right there, 4:30, the pound dollar did decide to finally make a move. It took it a little bit later. So if you would have chose, any kind of news trade on that, I mean, at best, close to break even on the short side. However, if you would have chose, around a 3 o'clock binary, if you would have given yourself more time, then you may be able to actually profit on the trade. But right there, pretty rough one. The news just sort of oscillated because it wasn't a whole lot worse than expected. Now, this morning, we had the ADP non-farm payroll change, which gave you an opportunity to do two different trades, dollar, yen, and gold on that report. And it took its time, but it did wake up, and it gave you plenty of time if you chose at least a 10 o'clock, which was, pretty easy to do. Sort of went over here, it oscillated, but then all of a sudden it started, this took a little while, but then it started moving down, pulled back up, and then kept moving down, and then moving down. I got a nice trade on that one. So I could have easily put off a 1-to-1, possibly even close to a 2-to-1 risk-reward trade right there doing the news trade on the U.S. yen. And then we had a 10 o'clock one, but it came in right after it. The number was worse than expected, but it wasn't that much worse than like the pound one. Wasn't a whole lot of movement off of it. We did get a little bit of movement. You probably could have got out for close to a break even on the trade if you decided to trade that right afterwards. But I just exited the U.S. yen trader here. I don't know why. You'd hop right back in on the very next one. So it'd be pretty hard to hop right back in because, got out literally just minutes before the other report came in. And, it already had the big move, so didn't necessarily expect a massive move. And we didn't get a real huge move off of the second report because we already basically felt that impact. And if we go on over, let's look at gold because you could have also traded gold on this report. And let's see here. Because basically anytime anything's tied into employment, with Bernanke and the way he's decided to tie unemployment to the quantitative easing, and that makes it where it's very volatile. So we go over here to 815, sort of had the same scenario, little oscillation, not a whole lot going on, and then just bam, flew on down. But would have worked out rather well. Could have got a nice trade on that. Got a full, over a half, really full solid half deviation off the report right there. So you see, you've got that nice half deviation. That's what you need for a 1-to-1 is usually a half deviation move, and then the thing turned around and came on back. So if you would have had a further time expiration, let's say you had, 12, or, maybe you had 3, then, depending upon what time you're going in, how you're trading it, they got a whole lot of new binaries they've added, by the way, so you have all these different expiration times. But I'm personally starting to I'm working on getting used to them myself because they added a whole bunch of new ones. But I guess it'll be 125 actually. So 125 right here and like right there. Literally you could have maxed out this trade. Did some huge moves. Had some great trades. Had a short gold trade on right there as well. So not only did you have the news trade in the morning to go in and knock out, get that 1-to-1, but you also had a great short setup and was able to take advantage of it. Looking on over and checking out what other reports. Basically, those are the reports for today. And let's see, tonight we're going to have the Aussie dollar is going to come out. This is usually a better report than the last couple reports that have come out, the building approvals. And so looking on over here at the Aussie dollar, building approvals and retail sales. And that'll come out tonight again at, let's see, 8:30 tonight. So you can hop on in. And what you do is about 15 minutes before the report comes out. You could really hop on about 30 minutes before, probably is what you should do. As you get faster and better at it, then you can go in and you can decide to get in a little bit later on the trade. And so maybe 15 minutes before, 5 minutes before, whatever. When you're first starting out, you want that extra time as you're just, figuring out how to put all the pieces together. And so after you do that, you hop in and go, okay, which spreads do I want to do? And what I do is I go and I pull up the spread scanner right here. And I got a box spread scanner. And then I'll pull up the pair that I want to trade. So let's say I want to trade Aussie dollar. And then I'll go in and I'll say, well, I want, say, 1-to-1 risk reward when I'm doing a straddle. Don't want to risk more than $100. That eliminate all the spreads out that don't qualify. And then I can go down here and I can basically find the trades that look good to me. Like this one's $44 risk. Probably don't want that one for a straddle. And but these right here, this is 3 o'clock expiration, $8 risk. I like that. And then this one is $5 risk right here. I like that. So there we go. Now I got a straddle, and I can do that right before the report. And then as soon as I'm ready, I simply click on the buy or the sell button, and it'll automatically open the ticket in the Nadex platform for me. You can do this in demo. You can do it in live, whatever works best for you. And obviously if you're live trading, but as you're learning, you have the advantage of trading on a demo account. And we even have it tied into demo right here at the top. You can choose. I want to go. I want to trade demo, or I want to trade live. And when you do that, once you're logged in to your Nadex demo account over here, Then you simply click buy, and it'll open the ticket for you. And then you click sell right there. And I have more than one screen, so it's showing up on the other screen there, but right there. So I got my two, my buy, my sell already filled in, quantity already filled in. Then I just hit place order. And once I've done that, then instantly I have, a straddle on. And so I can make money if it goes up, make money if it goes down. My combined risk on the trade is basically about $13 or so. So if I can make a $13 net profit, then great, I make money. So let's just say it's, we'll say it's $14 to make it easy. So say it's $14, $7 risk on both sides. I need to make $14 plus the other side. I want to count on losing. Let's say if it just goes straight up or straight down. So I need to make $21. So if I bought at 1.0477, I'd sell 21 pips higher. If I sold at 1.0466, I'd buy it back to take profit 21 pips lower. And that's it. I mean, just take your two risks, combine them, and take the risk on the other side, add it to that, and then get out at that number of pips, ticks, cents, whatever you want to say, above or below it. All right, so right here, that basically that's how you do it. Put it together. Let's look at a few more things with this and put some pieces together for you. See what we got coming up. What do we have coming up in the next 24 hours? Because there's a lot going on. So like I said, we got the Aussie dollar as a potential trade. But we also are going to have 4:30. We got services PMI in the morning that's coming out. We're going to have pound dollar at 4:30, and we're going to have the asset purchase and bank rate. That's going to be your big report at 7 a.m. So that's probably going to be the main one you're going to want to focus on. You may even not worry about the 4:30 services PMI at 4:30. I mean, you could do it if it's drastically off. You're going to get a move. But just be aware that the big news is obviously the interest rate announcement. And so that's going to come out at 7 o'clock. So you may be looking at, an 8 o'clock expiration, or you may be looking at a 3 p.m. expiration, or, there's a variety of new binaries that Nadex has just added in, which is pretty cool. So you can go in here, and I do prefer the spreads, but I also like the binaries for different trades. If I can't find a spread, I'll hop over to the binaries especially. But if you go here now, let's say looking at pound dollar, now they have ones that expire at 3, 7, 11. Okay, and these are daily, so they've been trading since 6 o'clock. So if I want to trade this announcement on the pound dollar, well, there's one that comes out, if I'm looking at both of them, there's a service PMI that comes out at 4:30, then there's asset purchase facility that comes out at 7. Well, I could choose, instead of having to get in one and let it, win or lose, what I'll do is I'll go ahead and I'll trade both of them. And if I get in on the first one and it wins, great, I can take my profit on it, and then I could look at doing another one. But just in case I don't have to, play it twice, I could come over here and play the 11 a.m. binaries and do a straddle on that. And so I'll show you how to do a strangle on that. I'll show you how to do a strangle on that when we get back from this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so we're just talking about, how do you do a strangle? We just did a straddle, as an example. So how would you do a strangle on binaries? So you go in, and what I do is I use the deviation levels, and of course you can get access to those through the members area there, the diagnostic scanner. And right here we post them every night, and you can go over here. So you just go to, say, pound dollar. Say that's what you're looking at trading, and you can look at half or one deviation up. And what you're doing basically is you want it to stay within a deviation up and down. So as high as 1.5176, as low as basically 1.5. And so I'd go over here and I'd go, okay, well, can I get on a risk-reward trade where I could get out at $50, okay, because I want to basically get out at, basically 50, maybe a few dollars before that, and risk 20 to 25, so that way I'm making, 25 or so whenever I exit out on the trade, which means I'm going to need a combined risk on both sides of about, $10 to $15 on each side for about, somewhere between 20 to $25 of risk. So I go up here, I go up to 51.76. That one's $37 right now. Not going to do me a whole lot of good. But that's, of course, based on where the market's priced at, from the opening yesterday. So let's look at where the market's at right now. So we go a deviation up, a deviation down. And right now, if I pull that up on the screen over here, and let's go look at pound dollar. And what we're going to see is the market's right at 1.5114. We're basically at half a deviation. So what we're going to be talking about, if we're at half a deviation, is going one deviation up would be half, or one and then 1.5. So 1.5 deviations up. And then so we're at half a deviation. Settlement is half, and then another half right there, so down to 0.5. So we really want to be looking at over on the deviations page, 1.5 to 0.5, which brings me up to 52.12 and then 50.56. So 52.12 and 50.56 is what I'm going for. So I'll go over here to 5200, 52.12. That's still $22. That's not going to do me a whole lot of good. And then I can go down over here to 51, or 50.76 here, and that's still about $25. So if I got out $50, I'm basically going to be break even. Literally doesn't mean no good whatsoever. So that trade is probably a trade I'm not going to take advantage of. Now, this one right here is 11 a.m., by the way, tomorrow. So it's a long way from expiration. So usually they're not going to be that expensive. It's because, we're talking about literally tomorrow, because it's 1:30 today. So let's look at one that's a little bit closer, see if we can find a little better choice, because if you're doing this in the morning around, say 4 a.m., obviously there's only going to be, let's say you're kind of 11 a.m., you're talking about 4 hours or so from expiration. So let's see what choice that gives. Well, 1, we could do a 3, we could do a 7. Well, 7's a lot closer. Let's try that, 7 o'clock. Okay, now we're talking. All right. Now I can go in here and 51.20, take advantage of that, and we'll go in and we'll look at this right here. So 51.80. Okay, so that's plenty of time and plenty of movement there. Let's, basically try to simulate the trade here. Remember, we said 52.12 was what we wanted. That's 51.80, so that's even closer. I like that. Okay, I want it to be really a half deviation is what I really want. 1 deviation is the maximum. So if I can get a half deviation, well, that's just perfect. And then down half deviation, that'd be down to 51.05. Well, we got a 51.20. So that's even, that's even better. It's like 15 pips closer. So we're basically talking a half deviation up, half deviation down, and 1 would be the max. A half deviation is the ideal, because markets, they move half deviations pretty much constantly. So knowing that you can, in a sense, count on that half deviation move happening, over 70% of the time, then that could be the trade I could focus on right there. I could put both of them on, and when I put both on, I have a combined risk of about $20 on the trade. Okay, and if I get out, let's say when I buy, here's my rule. Remember I said 50? Well, it's not. Remember I said, but not quite 50. Is what I like to do is, this is one thing you can count on in binaries when you're trading them. They will always be worth, or I guess there's 3 things. They'll always be worth 0 or 100 at expiration. Meaning if they're in the money, they'll be worth nothing. If they're in the money, they'll be worth 100. If they're out of the money, they'll be worth nothing. And in the money means that if I buy it, it's above the underlying market. Like pound dollar is above the strike. So if I bought 51.80 and it was above 51.80 at 7 o'clock, then it'd be worth $100. And if I sell it, that's saying that the underlying market, the pound dollar, is going to be lower than or equal to 51.20. So 1.5120 by 7 o'clock. So if it's less than that price at 7 o'clock, then I'll get paid out of $100. So I went in and risked, on that trade, $13 on this side, so I'd get an $80, $6.50 payout. That's great, but those are the 2 things are going to happen at expiration, but that's not how you want to trade binaries. That's the mistake. We're going to talk about how to get the edge in binaries when we get back right after this.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome back to the Diagnostic Trading Hour. And what we're looking at right here, checking out the strangle, and basically how to put that on, what the risk reward would be. So I said when I buy, I want to get out around 50. But let's look at a few things. One, you have bid-ask spread. Okay, so your bid-offer spread. So let's say that's $1, $5, whatever. You got to subtract that. So let's just say on here, looking at this, let's say it's $5. Well, that's going to put me at basically a 55.45 instead of 50. So if I buy at say $10, I want to get out at $45. Or if I sell at say in this case $86, buy back at $55 because I don't want to have to worry about that bid-ask spread. And then I also want to go in and add a few ticks just in case it doesn't quite hit my strike. It's like within a few ticks of it. We've all been there where the market just came right within like a tick or two of our take profit and went around the other direction. Same thing. So I go in, and what I do is a very simple rule. Is I buy at 10, I'll sell at 43. Or I'll say I sell at 90, I'll buy back at 57. And that's basically what I do over and that I'm doing on out of the money spreads, and you use out of the money binaries, and you use out of the money binaries whenever you're trading strangles, or when you're trading really anytime you're trading a strangle, you can use an out of the money binary over on the Nadex exchange. Pardon me. And by doing this, I can go in and I can put on a risk for $20. So I bought it and I sold at 43. Well, my net profit on the trade, okay, is going to be pretty simple, right? So if I had $20 risk and I got out at $43, I'm going to net out total basically a little over $23. And then if I sold it and I had $20 risk and I bought back at 57, then I'm going to net out again at about a $23 profit. So it's a very, very simple way to trade. And what I like to do is I like to compare. I go, okay, well, I'll go look at my spread, look at putting that on, go, okay, what's my take profit price? And look at that, and then I'll use that as a guideline as well. Okay, so not only do I want it to be within that one deviation, ideally half a deviation on whether it's a spread or a binary, but then I'll go, okay, well, where can I take profit on the spreads? And could I get it even closer? And how much closer could I get on the binary? So a lot of times you'll find that it's going to be the exact same price for that one-to-one risk-reward on the spreads as it is on the binaries. And if it's the same price, well, then you always want to spread over a binary. Because a spread, if it, let's just say the market just, you could literally break even on one side. You could make enough on one side to cover the risk on the other side. Even though you don't net out a profit, you could break even on the entire trade. You can make a little, you could lose a little. At the end of the day, basically means you could lose less on or lose nothing or make a little on a trade that did not hit your profit target. Whereas on the binaries, if we're getting out right when it hits the strike, which is what you need to be doing because you don't want it to get up there and fall back, which happens a lot on news. If you do it on the binaries and it doesn't hit your profit, you lose everything. So that's why I like the spreads. And but if there's just a stellar binary, I may look at the trade because there's just a good opportunity there. But there has to be a really good binary to overtake the power of a spread. Or if I just see a lot of volatility, I see a definite great potential trade coming up. We got like non-farm payroll, things like that. Let's say there's just not a spread in sight that I can use. Then I may go over and I'll look at the binaries. But I'm aware that even though my risk may be the same, even though my reward may be the same, my risk of losing everything is higher on a binary than. And when I say everything, I mean everything I put up. It's still only $20, so it's not like your risk can increase past that. But $20 times 10, $200 times 100's $2,000. So, anyways, that's a basic summary right there of the strangles, how they work, how to put them together, and on the binaries, and we talked about the spreads earlier this week. Yesterday I went into it, put an example on there of like a break-even trade and how we handled that, and then of course today we had a really good USDN trade that just took off, fantastic. Took it a while, but did finally do it, and that's if you can get another hour or two without paying more than too much, like you're not paying more than a couple extra dollars, you want to go for it. And because like they'll have ones that expire in 30 minutes or in an hour and a half or in 3 or 4 hours, and so keep that in your mind, because if they take off really fast, it didn't matter, okay? But sometimes they take some time, especially when news announcements come out before the market open. So they may come out like the US yen trade. It came out, the report was bearish for the US yen, but I mean ultimately, but it really didn't do a whole lot until after the market opened, and then we started really getting our move. And so choosing the 10 o'clock one really saved us on that. If we would have chose the 9 o'clock, may not have worked so well. And so the more time you have to be right, the better. Just at the same time, so I always look at time first, then I look at break-even distance, and then I look at where I can actually take profit. And so, because my risk-reward ratio, not as big of a deal if I'm taking profit, right? Risk-reward ratio if you're trying to go for maximum profit, or if all things are equal, if the time is equal and the risk is equal and everything's equal, then of course I don't really care. But, whenever they are different, then of course I'm going to go for another one. And here's an example for you. So I could choose this right here, okay, to go in, and, that's a great straddle. That's what we were looking at earlier. And the time to expiration is 79 minutes, okay? And the distance to break even is 6 and 3 on here. And I have a $5 risk on this trade, and I have a $6 risk on this trade. And then I can make $91 on this one, and I can make $90 on this one. Maximum profit potential, which is pretty high. That's great. But what you may not notice, especially if you're on the next platform, and this is if you're more going for trailing stops. You're going to one-to-one, you don't really care. But there's no reason to do this spread, because this spread right here, look at it. it expires at the same time. Now, we started trading last night at 6 o'clock, okay? So it's been, or actually, I guess it started trading this morning at 7. This one started trading at 1, and this one started trading at 7 a.m., went from 7 to 3 p.m. And so since it's been open longer, the longer a spread is, meaning the earlier it starts, the more hours it's open, the wider it is, because obviously there's more volatility possibility in that range. So instead of making it just 100 pips wide, they make it 200 ticks wide, because it starts at 7 and goes to 3. The other one started at 1 and goes to 3, so it's only 100 ticks wide. So they both have the exact same expiration time. This is 100 ticks and 200 ticks wide. So that's a bit of a clue for you. But you're maybe not even paying attention to that at this point. You go over here, you see break-even distance is 7 and 7. Risk is basically 5 and 5. Look at this, 91 and 191. So I literally can make another $100. I have the potential to make another $191 on that trade. It's obviously the better trade out of the two. There's no advantage to the other spread. It simply exists, and people go, why do they even have it? Well, they have it simply because they launch out new spreads every hour, starting at 8 o'clock in the morning. So every new spreads will come. Actually, on Forex, they start at 6 o'clock at night. Every hour, there's new spreads coming out. And a lot of times those, the floor and ceiling will line up because where the price was at a certain time versus where it's at again. And one number that does help you on this when you see those equalizations is one, of course, you can just look at the reward column or risk-reward ratio. Notice how one of them is $13 reward for every $1 at risk potential. And then $27 reward potential for every $1 at risk. So on the second one. So I could make up to $27 for every dollar I'm putting at risk. And that's obviously massive leverage. That's 2,700%. I mean, it's just huge leverage right there. And I'm only putting up, basically $5 plus, maybe $2 and not even quite $2, $1.80 in exchange fee. So $5 versus, what I had to put up. I mean, it'd be insane the amount of money you'd actually have to put up in comparison trading Forex. And had somebody asked me, like, why don't you just trade on Forex? I'm like, well, why would I trade on Forex? I'm going to go over here and I'm going to look at, 10,000 Aussies, and I divide that by 1.0471. Okay, so I have $10,471. That's what, if I'm trading 1 mini-watt on Forex, that's how much money I control. And I can get a 50-to-1 leverage. So I can go on 10,471 divided by 50. I'm going to put up $209 to trade a mini-watt on Aussie dollar spot FX. Here, I'm putting up $5 to trade the Aussie dollar spot. $5. And people go, what about your break-even distance, everything else? I mean, we're right here, 2 pips, 0 pips. I mean, this one's out of the money, so yeah, it's 8 ticks because it's basically the price is underneath the spread. But this one's in the money, 2 pips, $7 risk on this trade. And that's including exchange fees. So really, it's $6 of, risk in the sense of, my dollars at risk for margin I have to put up. And so if I go in and look at that trade, and I go, and it's, almost on par with the underlying there. So I'm not really worried about break-even distance or anything. And if I go down, let's see, 2,471 divided by 6, 1740. I mean, just in, massive leverage. I go here, and what's this? What happens? If I go in and put in 10,471 divided by 209.42, I get 50. So I'm getting 50-to-1 leverage on spot FX. I'm getting 1,745% leverage trading on the spreads. 1,745% leverage. 50 to, versus 50-to-1 at leverage. So my response is, why are you trading spot FX? You're getting horrible leverage. Your money's being used poorly, because you're not getting the buying power. And, by the way, I only have, $5 risk on this trade. You have how much risk? Because if you have a stop loss and it's not just 5 pips away, right, then you have a lot more risk than I do, and you're putting up a whole lot more money than I am for the exact same trade. I could do an entire lot, meaning 10 mini-lots, 100,000 units. 5 times 10. For $50. Okay? I could do 400,000 Aussies. If we go into 209, we divide that by $5, 41. So basically 41 mini-watts. Okay? 41 mini-watts is 410,000 Aussies. And that would be 1.047. $391,000. Okay? So, I mean, for, $200, I'm controlling almost $500,000. And my risk, by the way, is $200. Controlling, nearly $500,000. So, yeah, that's why I trade Nadex. That leverage is insane, but it's not the kind of insane leverage that can cut both ways. It just goes in your direction. And the more you start to realize this, you're like, wow, that is amazing. I'm like, I'll sit next to any FX trader, and I'll follow their trade signals, and I'll use less money, and I'll outperform them, because when they get hit, I'm still in, or I lost less. I mean, it's easy. Side by side, use Nadex on any strategy. And people go, well, how do I trade it? How do I know what to buy or sell? It's the same thing as you do if you're trading FX, if you're trading futures. Trade the same way. Okay? Just go in and pick your spread. So the hard part is picking your spread. That's why I made the scanner, because I got sick of having to go in and analyze 1,000 spreads manually. And but it was very, very difficult. Let's see, right here. The next thing let's go into, let's check out what we got going on for the rest of the week. And we'll go in and look at also some deviations real quick. But just to make sure you do have your stuff lined up, your ducks in a row, we got the Aussie dollar coming on out tonight at 8:30 Eastern time. Tomorrow morning, we got the services PMI again. That's going to be pound dollar. We're going to roll on into the bank rate, as I was talking about earlier, 7 a.m. That's your bigger report on the pound. And so you may want to look at that longer-term expiration. And then hop on and check out the, we got the minimum bid rate at 745 on the euro, but the big report, unless they surprise everybody with an interest rate change, okay, then the big announcement's usually going to be 8:30. It's the ECB press conference. That's usually what is the mover on the euro. At the same time, we're going to have unemployment claims come out. That's a U.S. yen trade. That's also a gold trade. So you could be trading euro, dollar, U.S. yen, and gold, all three at 8:30 tomorrow morning. And doing straddles or strangles, whichever you prefer. Straddles on the spreads, a lot easier, and I talked about the advantage of that, or strangles. And then Bernanke's going to talk at 10:30, so who knows where that one's going to go. Usually a decent gold mover when he talks. And people will be looking for any possible clue to what he's going to be talking about. And he'll be speaking about the due to speak about financial and economic conditions at the Redefining Investment Strategy Education Conference in Dayton via satellite. So, I don't know, I probably wouldn't expect a massive movement. He's not doing any testifying before Congress or anything like that. But often, anytime he talks, we get volatility. So, just because everybody's trying to decipher anything he says. So, just, be aware of that no matter what you're trading. And people go, well, I don't trade the news. Well, yeah, you do. You're trading during it. You're trading it. You just don't know it. It's like saying, I don't look both ways before I cross the street. I just walk across, and that works just fine for me. Well, it does until it doesn't, and the bus hits you. So it's good to know when the news is there, so you can be aware, hey, there's a big economic thing about to come out. I don't have to be taking a position on it if I don't want to. I don't. I go both directions, personally. I'll buy and I'll sell. So if it goes up or down, I don't care. Just go somewhere. But if I'm in a position, directional news is coming out, probably going to want to tighten my stops up a little bit, let that news announcement come out, and see if it goes in my favor or not. And then, of course, we got the big ones. We got the non-farm payroll and the USD CAD just going to light it up at 8:30 on Friday. Garrett there will be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. And like I said, just want to make sure you did have the wrap up for the week. We got USD CAD coming on out at 8:30 on Friday, so make sure you're taking notice on that. We also have gold because you got unemployment claims, and you got USD yen because you got trade balance and unemployment claims. So you got 3 at a time. But the cool thing about the USD CAD is you got 6 reports happening, actually 7 reports happening. At the exact same time. 3 of those on the CAD, all high-impact reports. 3 of those on the USD are high-impact reports, and 1 medium-impact report. So you have just a barrage of trades coming out. We should get some nice volatility off that USD CAD news announcements for the week. It'll be a nice way to wrap up the week and take advantage of that. So you'll just hop on over. You go to Box Spread Scanner. You'll click on USD CAD, and you'll be set up. Find your straddle. Now, what you want to do right now, too, is make sure if you're going to be in the Boston area or if you want to take advantage of this, book on your tickets, get on out there. We're going to do the Boston workshop right here. We're going to go out and do dynamic trading strategies, and we're going to go into how to do how to use the diagnostic deviation levels, how to do spreads and binaries. We'll talk a little bit about the news trades, how to take advantage of that. Tom's going to go into identifying the trade. He's going to go into setting up trades. I'm going to talk about binaries. I'm going to talk about spreads. I'm going to talk about deviations. I'm going to go into this, the principles of diagnostic trading, looking at how fundamental, seasonal, technical, statistical traders look at the market. And then we're going to bring it together in the most important thing, which is your money management. So your risk management, and your profit management. Both very, very important, really essential. That's everything in trading. You could have the best system in the world, but you mess up once, you could blow it out. So you want to make sure that now, of course, you don't have to worry about that on Nadex, because at least you're capped on your risk. But I mean, I've seen people go in and they've had 2 weeks. They're doing great. They're winning every trade, and then all of a sudden they go all in on day 11 because they're so confident, and they lose it all in a day. So you got to have that good money management system put together. So we'll talk a little bit about that as well. And we'll be giving away over $3,000 in prizes. We'll be giving away ½ ounce of silver, 1 ounce silver coins. We'll be giving away spread analyzer subscriptions. We'll be giving away books. We'll be giving away subscriptions to the Gold Report and the Art of the Time in the Trade book that Tommy wrote as well. So there's a lot of giveaways coming out. So it's a great event. It is live, in person only. You do have to register. It is free because Nadex is footing the bill for it. They're taking care of it. So there's no cost at all. They're covering everything. You do got to register there to have a seat. We're expecting this to be really full. And so we're starting to see a lot of interest. So make sure you do reserve your spot right there and get your tickets to get on out there. And, we're going to be, again, doing it in Boston. And we look forward to seeing you out there. And if you have any questions, let us know. But also we'll be right there at the Boston Marriott. So that's where you'll be booking your hotel at. And if you're going to be, or if you live in the area, of course, you can just drive on in the morning. And but it'll be a power-packed workshop. And I look forward to seeing quite a few of you out there. And if you want to get a head start, make sure you do hop on over. And I do recommend that literally today, right now, if you're online, hop on over to Nadex.com, click on Range of Markets, click on our products, click on Demo Accounts, or just go down to the bottom of the screen. And at the very bottom under our products, you'll see Demo Account as well. And then fill in your username, first name, last name, phone number, and email address. Click Apply for Demo. And what that'll do is they'll send you an email in about 5 seconds. It takes about 15 seconds to get a demo account. And so they send that email, you log in, and you can actually start doing some of these straddle trades. You can check them out. And when we're like, well, I need the spread scanner so I can find the best spreads. And I don't quite understand how all this works. Hop on over to TFNN.com. Take advantage of the free 2-week trial we give you right here. And you can go in here, you can log in, and you get access to everything. You get access to the deviation levels. You get access to the tutorials on the spread, tutorials on binaries, and you'll get access, obviously, to the live spread scanner. Does the math for you and makes it easy. So, anyways, I hope y'all have a great day, a safe day. I'll see you tomorrow. Stay tuned. We have another great show coming up for you right after this.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.